This being the year of elections, the interim budget, of course, was expected to be a populist one, particularly in terms of giving tax sops to middle-class salaried payers. While profusely thanking the contribution of the salaried taxpayers and the small income earners, the finance minister did make it a point to live up to the expectations to some extent for increasing the disposable income. What he has done in the interim budget is that he has not really tinkered or tweaked any of the income tax exemption thresholds, nor has he changed any tax rates. Just to clarify, the progressive income slabs remain what they were as last year, which is up to 2,50,000 the income is exempt. 2,50,000 to 5 lakh continues to trigger tax at 5%, so on and so forth. But the relief that has come actually is in the form of a tax rebate, which from 2013 this government has been giving relief to small income payers by way of a relief. So what is actually proposed is that by virtue of this rebate, up to 5 lakhs of income, you effectively don't land up paying taxes by virtue of this increase in the rebate threshold. It's not that the exemption limit has changed, and it's not that you don't have an obligation to file a tax return, but definitely up to 5 lakh salaried taxpayers, they get this tax relief in the form of a rebate. The other thing that he has done for this salaried taxpayers, who generally are an aggrieved lot because they don't really get any tax deductions vis-a-vis self-employed people or other cases, he has increased the standard deduction limit by around 10,000 rupees this year again. Last year, he brought out to 40,000 relief. He's hiked it up to 50,000. And that is again, should hopefully be a universal tax savings for some of the taxpayers, depending on the income threshold that you fall under. The second aspect of the personal tax proposals are basically to give an impetus to the real estate sector. Most individuals have investments in house, sometimes it's more than one house property. Sometimes by virtue of the family dynamics, old parents, children education, people may not be able to live in the home that they actually have. So currently only one house is treated as self-occupied property. He's extended this benefit for individual taxpayers by saying that the second and the third house, if any, which earlier was being taxed, now that notional rent taxation has been done away with. Up to 2 house properties you can treat it as self-occupied. So this again is quite a welcome relief to individual taxpayers. The other aspect, again focusing on the real estate, is basically your long-term capital gains. There are currently rollover tax provisions if you sell a house property and you reinvest it in another house property. So if you invest the capital gains into one more house property, there are current tax exemptions. A one-time tax sort of relief or exemption is again proposed to be introduced in the interim budget, where if your capital gains is up to 2 crores of rupees, then you can get this relief even if you invest it in 2 houses and not just one house. An intention again seems to be to, for affordable housing, if you invest in smaller houses, so 2 houses is again an introduction in this long-term rollover relief, section 54 to be precise. All in all, while not all aspects of tax deductions which salaried taxpayers wanted, like your ATC deduction, have really been high, but all in all a populist budget as far as individual taxpayers are concerned.